What is going on, people? Welcome back. Just wanted to make this quick video today. Something that's very important in trading is the importance of giving our trades a second chance. As we know, not every trade's going to work out. That's why we have a plan, why we follow our edge. But in saying that, sometimes if you have managed your trade, you get stopped out. Doesn't necessarily mean the trade's invalid. The idea still may be valid. So it is important when we're going into the markets that we're giving our trades a second chance. If it does fit the rules, looking to say, hey, this is something that could still work. What I'm going to do is run you through a trade that I took this week, which managed the first trade, got taken out, and then took it again. I still thought the idea was valid. It still made sense to me, and it ended up being a winner. So let's jump onto the charts and we'll run through it. We got our espresso. Good. Now, this was on Wednesday. I jumped on the charts about 4 p.m. London time, which was obviously before the London session opened, and I saw, just using the 30-minute time frame, we had some liquidity lows there and some liquidity highs here. They were two areas that I was looking to target. Price had closed bullish, pushing, so I'm like, okay, there could be a chance the liquidity is going to sweep the upside. This was about 6 a.m. London time. Now I saw, okay, prices pushed up here. We've looked and we've actually grabbed a liquidity level just there, which is that candle, and the 15 has closed back bullish. What I was pretty much looking at, which I'll show you, took the trade live on my TopstepX platform. As soon as this 30 closed, if we broke those 30 highs, I was looking at coming up into these liquidity highs, which for me was about 50 ticks, which made a lot of sense to me, risking off these lows. Again, if we've had the liquidity grab, price shouldn't need to come back down and grab it. What happened? 30 candle opened and we pushed. You see in the recording, how I like to manage my trades is once we break above, so there are my initial lows, I will then risk off the candle once it starts pushing. So that takes the risk from, call it 25, 26 ticks down to 9 ticks. Now, when this did push up in this candle, which you'll see, I did lock break even, and price pretty much came down and tagged me out. And I was like, you know what? That's okay. It made sense. It was still a good trade, fit the plan and everything like that. I did also see it, reject here without grabbing the highs, which makes me think there are going to be a lot of people seeing that rejection from this level. They're going to be looking for this big play down with their stop loss above there. And how I like to trade is obviously trading into where most people are going short, or trading into where their stop losses would be, understanding liquidity. So after that trade took us out at break even, this was on the 5-minute time frame, I still like these highs to be grabbed. Where price was, there was still 40 ticks into the highs, which still made a lot of sense, being that this was just before 7 a.m. London time. So what I was looking at up into here was sort of 12, 13 ticks, which I like. I still wanted to look for buy. As soon as this 5-minute candle closed bearish, this next one actually opened and pushed back up. So I thought, okay, we're in an uptrend. We've shown a sign of reversal, but then this 5-minute candle has closed like this and closed back engulfing. If I was going to risk from where price is, that was only a 14 tick risk coming into volume. I had a buy stop on the break of these highs. Now for this one, I was only targeting 20 ticks. 20 ticks is fine. If you can catch 20 ticks a day or even a couple of times a week, you're going to be chilling. So targeted that. Stop came in below these lows. I was actually watching it on the 15-minute because this was the bottom wick of the 15, understanding, as you'll be able to see, it does have to form a bottom wick before pushing up. Then as price started pushing up, spiked up into the 20 tick take profit. So end of the day, up 20 ticks. As I said, one break even, one trade for 20 ticks, which was fantastic. So that's why it is important. You want to give your trades a second chance. If you've got, for how I trade, if you've got a clear level of liquidity that price is going to take, something to target, then it makes sense. Obviously with the markets, we don't know what's going to happen. We don't know where price is going to go. Price can go anywhere. All we can do is react. I just wanted to give you that quick trade breakdown of one trade I took this week, and it just is important. You want to give your trades a second chance. Just because you get stopped out, if you've got the right management, you are managing your trade as it pushes up, doesn't necessarily mean it's a wrong trade. Hope you guys enjoyed this trade breakdown video. Let me know what you thought. If you want to see more like this, thanks for tuning in. See ya.